Wednesday, June 19th, 2024, Maneko 64, home of alternative economics and contrarian views. Today we're going to look at something to do with the current Tory government or Tory regime that started on May 11th, 2010, and the previous Labour regime that started on May 2nd, 1997. We're going to look at the currency scorecard of those two governments, two regimes, if you want to call it. And we're also going to look at whether your savings or your wealth or your business is going to be safe under most probable Labour government after July 4th. And I'm going to give you my humble opinion of how you could kind of protect some of your wealth or savings. And it will be related, of course, also to the currency scorecard. We're going to see who did better in the very similar time frame of about 14 years. There's a lot, of course, of misconceptions out there. The economy isn't doing great. It's because of Brexit. You hear a lot of that. I remember back in 2016, in the run-up to the Brexit or to the EU referendum, I made a lot of videos about this. I said before and after, if there is a Brexit, if people vote to leave the EU, they're going to use that as an excuse for the inflation that's coming. And how did I know there was an inflation coming? Well, because they needed to keep inflating the currency, because the previous regime, the new Labour regime, had put the country heavily into debt to bail out the banking system, to bail out people with big mortgages, and highly indebted the Treasury. So the only way to keep things going is to keep inflating, to make the debt worth less. And I said, you're going to see in a few years that people are going to blame Brexit for everything, and they're doing so. And I guess you can say the same thing in 08, from 08 to 2010. Everyone's going to blame the global financial crisis for labor losing, right? But it went a lot further back than that. And I think a lot of it is to do with the debt and the currency scorecard. And we're going to look straight at that now, right now. Currency scorecard. So what am I going to measure the pound sterling against? No, it's not against the dollar, even though I could. But it's against a currency or a money that has been the best and most stable store of value for thousands of years and is still legal tender in this country, and that is gold. And keep that in mind as well, the legal tender aspect of gold in this country. And by that, I mean gold sovereigns or gold Britannias. But anyway, I think it's a very good way to rate both regimes, the previous New Labour government and the current conservative regime we've had since 2010. Because at the end of the day, if the currency that you earn in maintains its purchasing power or even increases its purchasing power, which unfortunately it hasn't done in over 100 years, things are good because you can buy more, you can do more. It's when you have the opposite that you get trouble, and that's what we've had. And before we look at the currency scorecard, I did a little date calculation here. There's timeanddate.com. You can calculate the number of days between dates. So I did 2nd of May, 1997, which was the day in which Tony Blair became Prime Minister and Labour took over from Conservatives and John Major. And then I put the end date 10th of May 2010, which was when they lost the general election. So that was 4,756 days. So 13 years, 8 days. So yeah, and now I've calculated the current conservative regime. They took over on the 11th of May 2010. And I've done it to today, 19th of June 2024. And it's 5,153 days. So 14 years and 1 month. So they have been in power and will be in power a little longer than the previous regime, about a year and 2 months longer. But I would say that's part of the problem, the fact that they're in power for so long. Because let's say you've got someone in their mid-20s, early 30s. They weren't even born, or in their early 20s, they weren't even born when Tony Blair took over in 1997. They don't know what was happening before then. So it's very easy to manipulate people's perceptions, and even people that were around and that might have even been older, they forget things and they don't look at the right things. And in the previous cycles, they were also manipulated. So all these perceptions keep accumulating. So that's why I think a currency scorecard is really good, because at the end of the day, as I said, if your currency maintains its value and purchasing power, the economy is doing well. So let's start with the new labor, or the labor regime. So I went to one of my favorite websites. You can go there too, fxtop.com. So I took the start date, 2nd of May 1997, and the end date, 10th of May 2010. And the interesting thing about this chart is that it's reversed. It's the price of the pound in grams of gold. So this is how many grams of gold you're going to get for 1 pound. So as you can see here, during that period, the pound dropped 74% versus gold. So that's how well the currency did. And you could get a lot less gold than you could back in 1997, 2010. So keep that in mind, 74% loss. So now let's look at the Tory or conservative regime or governments that we've had since 2010. So there you go. It's dropped 55%, the currency versus gold. So, and you're not going to hear that in the mainstream. And I'm not defending the Tories, because they also did a really bad job. The currency lost 55% versus gold. I think the price of gold when they took over was around 800 pounds an ounce. We're now at 1,800. In 1997, the price of gold, I think, was around 200 pounds, or maybe a little less than that. And then by 2010, it was around 1,000. So they've both done badly, but the conservatives win. And why are they going to lose the election? Well, because of this cycle and the perceptions. And but I would say that the currency as well is a big factor, because the currency is losing a lot of value and your savings have been trashed. And today, of course, we got the inflation data, the CPI, and I'm sure there's going to be a lot of cheerleading, because we got to 2% year on year, the CPI, which is the Bank of England target. But I did a video just under 2 years ago, and I'm going to put it up in the cards above and in the description, about how they've tweaked the Office for National Statistics. The same people that tweaked the excess deaths, they've tweaked the CPI. So this is not like an honest scale. They've done everything they can to tinker with that scale and make CPI look like, or inflation look like it's under control, but it's still rising at 2%. That's all you need to know. And if you look at the CPI index itself here on investing.com, it's still rising. So inflation or prices are not dropping. And I would argue that the real inflation is the supply of currency and credit out there. And if you look at M2, it's a one-way street. Yes, it's had a little bit of a pullback, but is growing back again. And so is M3, which includes a lot more credit instruments. That's not going to keep dropping. You're not going to see these currency and credit supplies go back down to where they were 20 years ago. So what I'm trying to say here, inflation, or what they call CPI, has been brought under control after a lot of tinkering of the scale, but the real inflation, the creation of currency and credit, is still growing. And now I'm going to switch over to whether your wealth or your savings are going to be safe under a Labor government, which is very probable that we're going to get. Well, as you saw before, the value of your savings, be it in the bank or wherever it may be, is going to be affected by the value of the currency. So if you can keep your savings growing faster than the currency is declining, you'll be okay. But what about taxes? Well, taxation, I think both sides of the aisle, they favor a kind of voting bloc. I think Labor is going to favor the working class, as people call it. I don't like to use that term, but be as it may, that's what it is. And I think they're going to punish the people with more assets, and they could do that through higher capital gains tax, higher council taxes, which is basically a tax on your property or real estate. They could do it on your pensions, people who have a bigger part of private pensions, and they will shift those tax receipts over to the people who, are working class. And short of leaving the country, if you have a lot of assets and you've done well and worked hard, there's not much you can do. And I don't think under the Tories it was that much better, because we still have a lot of taxation. The tax burden is huge. And if you look on average, the higher earners pay a lot more of the taxes already. So I don't know what to say. I mean, there's a lot of people out there that analyze this a lot more in detail than I do, but I try to look at the bigger picture a little more. But one thing I would say, and this is my opinion, not financial advice, is that if you keep your all your wealth in the financial system, let's say private pensions, stock market, ISAs, private equity, all those kinds of investments, even in the property market through second, third, and fourth homes to buy to let properties. I think they will be under threat because it's in the financial system. And I'm not saying you should get rid of all those investments. One thing I would do is hire a very good lawyer and a very good accountant if you haven't yet. But my strategy to try to safeguard some of your assets is to take it outside the financial system. And how do you do that? Well, you do it via gold and silver, because gold and silver are not considered financial assets in the UK, especially coins of the realm or legal tender, like gold sovereigns, Britannias, and also silver coinage from the realm, silver Britannias. and they don't incur capital gains tax, and they're not kept in the system, in the financial system. And why is that important? Well, because it's harder for them to track your wealth and to tax your wealth. And as I said, there are no capital gains tax on gold and silver. Yeah, and I am aware that they could change that, but that's the risk you're going to take. And even if they were to do that, it's much harder for them to come after you. And as you can see as well, gold especially has done very well since 1997 versus the currency, because it protects you versus inflation, because currency debasement is basically inflation. Don't buy into this thing that inflation now is under control because it's at 2%. So gold has done what it says on the tin. And if you didn't know about that and you're interested maybe in acquiring a little bit of gold or silver, check out Gold Investments. They are my affiliate here in the UK for precious metals. I started acquiring a little bit of gold back in 2002 because I could see the inflation coming. I had just learned about all these things, even though I'd worked in the financial sector since the late 80s. It took me a while to learn. But I don't think it's late to protect your savings and your wealth outside the system with gold. And yeah, all the details for gold investments are below in the description. And as I said, I started in '02, and I started with Gold Investments with Mike Temple, and now their sons, Oliver and Simon, are running the business. So it's a very, very reputable firm. And they've been in business for over 40 years. So outside of that, I'm not here to tell you where to invest your money in terms of the markets. I'm just giving you a bigger picture idea. And I think, yes, a good accountant and a good solicitor maybe is something that you should consider. But in the end of the day, it's the currency, stupid, right? And I'm not calling you stupid, but it's a term used by one of the Clinton advisors, or someone said it's the economy, stupid. So let's quickly look at the markets before we wrap up. I'm going to look at the price of gold in pounds right now. For my UK viewers, we're at 1,832. Yes, it's been higher this year. It's been above 1,900, but it started the year at 1,600 or thereabouts. So gold is continuing to do well, or the currencies continue to drop. In dollars, the price of gold is at 2,331. It's up about $2. The high's been 33 and the low 26. So it's been fairly quiet overnight. Silver is at 29.52. It's virtually unchanged. The low's been 32 and the high 61. The Dow futures is down 35. The Nasdaq is continue to surge ahead, and so is the S&P. And I saw that Nvidia now is worth the biggest company in terms of market cap in the stock market. It surpassed, I'm not sure, is it Apple or one of the other big tech companies. And no, I think everyone's trying to pile into Nvidia, and that's a dangerous thing. I'm not saying there's going to be a crash, but that's a different story, though. What about the currencies? Well, sterling is up slightly, 0.1%, or 0.125. So we're at 127.24 versus the dollar. Tomorrow, the Bank of England is meeting. It's not expected to change rates. We're still, I think, just above 5%. They haven't cut rates yet. There's a story that said that they weren't going to cut because of some concert by I think Taylor Swift or something. Not sure why they wait until after the concert to cut rates. They have the excuse now to cut rates with the CPI at 2%. The euro is pretty steady, 127.29. The dollar has been going up quite a bit versus the yen. So the yen has been dropping. Dollar got above 158 yesterday, but right now we're back below that 158 at 157.70. Crude oil, there we go. Crude oil is back above 80, which is not a good thing because that's a key level. Even though we're down overnight, we're at 80.56 WTI, and Brent is at 84.58, down about a third. High-grade copper is up 0.2% at 448.65. Let's look at the bond markets. The 10-year yield, that's at 4.22. So the bond market is continuing to do fairly well. Yields have been dropping in the States. I think we had some weak data yesterday as well, retail sales. And what about the UK? You'd think gilts would rally after these good CPI or inflation numbers, but actually the 2-year yield for the gilt 2-year yield is still around 4.2, and it's up 5 basis points today. The 5-year is up 6 basis points, just below 4%. So there you go. Mortgage rates are still going to remain elevated, and prices are never going to go back down to levels that we saw 5-10 years ago. So that's what you need to know, in my opinion. And with that, I'm going to wish you all a very good day. Take care. Bye.